We're going to start off the show talking about Roundhill ETFs, including DRAM and some other new additions, old and new investments that they have been creating lately. So, when it comes to ticker symbol DRAM, it is the fastest growing ETF ever, even surpassing ETFs that track Bitcoin. DRAM. Let's go into it for a little bit. It is the Roundhill Memory ETF, and it was launched. Its inception date is just April 2nd of 2026. And when it comes to this one, it focuses on memory and semiconductors. And so it gives you exposure to the memory side with AI infrastructure. AI is so much more prevalent in everything that we use nowadays. And memory is becoming even more important. So this is a grouping of those companies that are going to be the strongest players when it comes to this. This is a brand new fund, just April, not too much history for us to reflect back on. Oh, I've seen some people reaching out to me, asking my opinion, feeling frustrated because they are currently down on their investment. And that's going to happen. This fund just came out, as I said, just so recently. And let's go over to take a look, see. Okay, in that short amount of time that it's been around, the price has had a high of $81.34 and a low of $26.14. I only have a few shares in my portfolio, and I picked them up when it got below $49 just recently. And so I can understand people's frustration, but you have to realize it's been such a short amount of time. This is when I want to encourage you guys to make sure that you have a clear distinction when it comes to choosing it for your portfolio. Is this an investment or is this a trade? Will I want to continue dollar cost averaging, buying additional shares? This has a pretty low share price. However, you're going about building up your portfolio. Is this one that you would want to add when the price dips? You have a long-term conviction in what they've created here around this memory ETF. So these are things to talk about. So my take is this is something that, as I said, I have a very small position. I only have 5 shares, which I will show you what my position is looking like so far. But the thing is that you have to, I would pair this as a much smaller allocation to my portfolio than my S&P 500 investment or even SPMO, my momentum ETF, because it's so new. It's going to have a higher level of volatility. So you have to know what's the right fit for you. These type of funds, these type of sector specific, very niche funds, they come with a higher expense ratio. And that's because Roundhill is putting together things that they anticipate to have that higher performance. But you have to be ready for the volatility. You have to know if it's the right fit for you. And it's only been out a few months. Something can be the right fit for your portfolio, but not this early on. I was doing a live a few days ago, and I used the example of Amazon. It would be a totally different experience investing into Amazon in the late 90s, say from 97 into 2002. If that was your starting point, you would have gone through so much pain over those years, waiting till it became even profitable. Never mind deeper and deeper into profit. It was not even having profits to report back then. But it would be a totally different time frame and experience if you incorporated Amazon into your portfolio, say between 2001 and current. So just an example that I wanted to share. As I said, I'm going to show you my position when it comes to DRAM right now, but it's something that's going to need time. It is anticipated. Like I said, I picked it up a little below the $49 mark, and someone had reached out to me and they're currently down on their position. I don't know exactly what their average price is, but like I just touched on, it has hit a high of $81.34. And it is anticipated by looking at analyst forecasts that this is anticipated to go back into the 70s and $80 range. It's just a matter of time and being patient if this is something that you have that conviction into and have invested into already. Now, let's go back and take a look at some more of these Roundhill ETFs and drop your questions as we go. So let me know what you think about these funds. I was going to share my position before we went on to something else. Here it is. Right. So here are my 5 shares of DRAM, average price $48.12. So I'm just up slightly when it comes to this one, but I do have some limit orders in. I did plan on building on it a bit more, but my limit orders have not filled. And I have not put in a plan yet of, a daily or weekly investment in order to build up this position. But it will remain a smaller position when it comes to my overall portfolio. All right. So now Roundhill had 2 more ETFs that came out just this month. And we're going to take a look at those. I added LYTE at the last second, right before I started the live stream, because I had forgotten about it. But first, let's look at ticker symbol NCLD. So this is the Roundhill Neocloud ETF. Okay, so we have 20 holdings here, and this one launched on August 6th. We're going to take a look at all of the expense ratios together, but they're actively managed funds, so they come with that higher expense ratio. This one focuses on companies providing AI computing infrastructure. So right now, this is one that's kind of moving beyond just those chips that are needed. It's going into the computing power that's needed to run AI. It targets the infrastructure layer. This is extremely new. The fund as a whole, there's even less of any time for us to look back on. So with these ETFs, you also need to then take a look at the top holdings if they are companies that are easy for you to research, and then draw from that, because like I said, you got to make your own decision and realize this is not the volatility, such a very specific niche amounts of companies, the sector that you're going to be holding. You have no broad diversification to give you some stability and kind of help you to ride the wave. And also, as we've seen so far, there is a very low amount of companies here. That's another factor. It's not even a few hundred, never mind thousands that you can get in some of these funds. So this is a look at ticker symbol NCLD that just came out from Roundhill. If we take a look at how this price, well, we can see it on this page too. Let me see if this matches my notes. Yeah. So, so far since it's been out, which is just this month, it's had a low of $21.80 and a high of $28.10. So about $22 up to $28. Another one that needs time for it to play out. And the top 10 holdings here, let's see, we see Nibius, CoreWeave, Iron, Hunt 8, Applied Digital. So this is what I mean when I say that when you're going to choose the path of going with an ETF that is so new, take a look at the heaviest weightings and do a little research on those in order to help you to make your decision on whether you want to go the route of investing into the ETF. If you want to choose some of those top holdings and invest into them directly in order to lessen the amount that you have to pay for an expense ratio, there's different ways to go about making your plan when it comes to investing. So, like with me, I've decided to invest into SMH as a way of getting exposure to semiconductors. That was after I had a few individual stocks and then decided I want to rely on an ETF because I didn't want to have to continue building up positions into so many. So this is the Neocloud ETF. Next one, well, no, let's go down to LYTE. This is the other one that I told you that is extremely new. It just came out on August 6th. And this fund is Photonics and Optics ETF. So it's going to be the same kind of situation, just like the one that we took a look at. So this one has had a low of $24 and a high of $27 so far. And let's take a look at how they describe this. Exposure to compute and connectivity layers powering the AI infrastructure build out. So some of these top holdings here are um, Lumitum, Coherent. Those are two newer additions to the S&P 500. And other names probably we're not going to be as familiar with if I do even take the time to mention them. But let's go back to the previous page. So those are three of the newest Roundhill ETFs that I am aware of that give you, especially DRAM. That's one that everyone's been talking about, but it's had a pullback. It's really moved a lot since its inception, which is just April. So, guys, make sure that you're incorporating things that you're comfortable with, and yeah, it takes time. It takes time sometimes for your investment to, get its footing. Certain sectors could be impacted by so many outside sources. So we have to be ready for that and make that decision on what is the right stage to get started investing. So now let's take a look at some of those more established funds from Roundhill. And we'll go to chat. So this is the Roundhill Generative AI Tech ETF. So this is a bit more established fund when it comes to Roundhill. This one dates back to 2023, just a few years, 49 different holdings. And this gives broader exposure to generative AI and technology. So names in here, we're going to see NVIDIA, SK Hynix, Google, AMD. So we touched on what chat is a little bit. One of the more established ETFs from Roundhill. And MAGS is another one that you may have heard of. And this is the Roundhill Magnificent 7 ETF. So it's going to be weighted into what the Mag 7 is. Those we know, Microsoft, Alphabet, which is Google, Amazon, NVIDIA, Meta, Tesla, of course, Apple. And yeah, I do not see they Roundhill, I think maybe they've over the years gotten to the hang of things of creating a ETF that really have top performing companies in a way that is worth the expense ratio. But I don't think not so much when it comes to this one. And this one also dates back to 2023. So if you already own something like VOO, I wouldn't bother with using this fund. I definitely have overlap when it comes to my ETFs, but something with more growth and lower costs than to go with a fund like this. And the last one I'm going to touch on before we look at the expense ratios and performance on all of these Roundhill ETFs is this Metaverse ETF. And this one also dates back to 2021. And this came out probably when all of that Metaverse talk was very popular. And they thought that they were putting together some compelling investments around all that hype that was going on around this. But there was excitement around the potential of the opportunity, but investors have not seen them be able to put this into a place where we can see that it's actually turning into a theme with earnings and shareholder returns that will be beneficial long term. So, but even though these are some of the older funds when it comes to Roundhill, people are definitely excited and giving them a chance when it comes to getting on board with what they're creating now around this photonic and optics, as well as the memory ETF here. On the screen here, you should be able to see the expense ratios of all of the funds that we've been taking a look at so far. And they're between the lowest is that MAGS funds at 0.30, and then the others are 0.59, most are 0.65, and then we have the chat ETF at 0.75. So pretty high when it comes to those expenses that you will pay for holding onto these funds. But when a fund commands a higher expense ratio, I'm assuming that the performance is going to outweigh and be a benefit to you long term. So you're usually able to and willing to pay that. Let's take a look at, so those are the expense ratios. I'm going to put VOO in the mix here, which I'm just doing that just so that we can see how these funds have been performing against a basic S&P 500 investment. So I'm just throwing that on just for that reason. And we're going to look at this on a shorter time frame. Let's start at 6 months because a few of these funds have just come out. Some came out this month, some one just in April. So taking a look at the performance on the 6-month time frame, DRAM up 106.56%. So definitely in a place right now at $57, where it has pulled back from its high of 80 in that short time period. But we need to give it time to see how this one plays out. And we have to be ready always to have the volatility when it comes to holding such a specific ETF with a small amount of holdings within it. Okay, so chat is up about 48%. Ticker symbol NCLD is up about 20%. That Metaverse ETF is up about 16%. And then we come to VOO, which I just threw in there just to give us a little benchmark so you can see how they compare to the S&P, which is up 14% over the last 6 months. And then coming in on the bottom end here is the MAGS ETF and the LYTE, LYTE ETF, one of the ones that just came out this month. So I'll just go to one more slightly higher time frame. I'll go to 1 year. And so as I've said, some of these have nowhere near a year to reflect back on, but DRAM is still the leader when it comes to this grouping at 105%, but significantly down from over these last couple of months. That was a look at some of these Roundhill ETFs. So let me know, which ones have you added to your portfolio and how concentrated of a fund do you like to have in your portfolio? Do you think that these are good fits for you? What do you think? Do you think that these expense ratios, I know some of these older funds are more focused on like LYTE, NCLD, and DRAM. Do you think that these expense ratios and the future of the companies that they hold are worth it? And are you building in at this point, or are you kind of giving it time, only building in at those very low price points, or are you giving it time to play out? Maybe just like we're often encouraged to do with IPOs, give it 6 months, give it a year. You don't necessarily have to jump in when it's so brand new. Okay.